finally happened. After months of speculation, closed-door policy meetings, cryptic sexiness memos, and tightening regulatory chokeholds, the U.S. government has made a historic move. It has officially banned Monero, XMR, one of the most privacy-comforted cryptocurrencies in the world. But this isn't just about Monero. This is the opening act in a much bigger, more unsettling story, one that could affect every crypto investor, every digital entrepreneur, and anyone who still believes in the idea of financial freedom. For years, Monero has existed in a sort of legal gray zone, approved by no government, yet not explicitly outlawed either. It wasn't listed on Coinbase, sure, but people could still trade it, mine it, store it in cold wallets, and even buy goods and services in the privacy-first corners of the internet. But in June 2025, everything changed. In a coordinated move involving the Department of the Treasury, FinCEN, and the Office of Foreign Assets Control, OFAC, Monero was officially labeled a currency of concern. And that's just a sanitized way of saying, we're shutting this down. US-based exchanges were given 30 days to delist Monero. Financial institutions were instructed to flag and freeze accounts interacting with Monero wallets, and a new advisory was quietly issued to American citizens warning against engaging in transactions that facilitate anonymous movement of capital. And just like that, one of the most important digital assets in the crypto space was cut off from the mainstream. But this raises a massive, uncomfortable question: why now? Why Monero? Is this really about cybercrime, or is something much deeper at play? Because make no mistake, Monero isn't a meme coin or some shady pump-and-dump scheme. It's a coin built with elite-level cryptography. Unlike Bitcoin or Ethereum, where every transaction is stored on a public ledger forever, Monero uses ring signatures, confidential transactions, and stealth addresses to make it virtually untraceable. Law enforcement can't follow the money. Governments can't track wallets, and corporations can't mine your spending habits. In a world increasingly addicted to surveillance and data collection, Monero is a digital ghost, and that makes it dangerous. Not dangerous to the average person, dangerous to governments. Because as nations like the US, China, and the European Union race to roll out CBDCs, central bank digital currencies, they need full control, total traceability, and absolute compliance. Monero is a firewall against that future, and that's why it had to go. But here's the twist you won't hear on CNBC or Bloomberg. This ban doesn't mark the end of Monero. It might be the beginning of its next chapter, because when something is banned, it doesn't disappear, it goes underground. It becomes more scarce, more valuable, and more resilient. In fact, the moment the ban was announced, Monero's price dropped for about an hour, then started climbing. Why? Because people finally understood what was really at stake. Privacy isn't a luxury, it's a necessity. And with every restriction, the crypto community is realizing just how fragile our financial freedom really is. Just look at history. Every major overreach by governments, from the Patriot Act to post-2008 bailouts, was justified by fear. Fear of terrorism, fear of collapse, fear of crime. And now, it's fear of unregulated crypto. But remember, what starts with one coin never ends with just one. Monero is the first domino. But the whispers are already swirling around Zcash, Dash. Don't forget that Tornado's developer is literally being tried in a Dutch court right now for publishing open-source code that helped people stay private on Ethereum. Think about that. Publishing code, math, is now a crime in the eyes of some governments. So what does this mean for you? It means that if you're holding crypto, you're not just investing, you're participating in a political act. You're saying you want some control over your money, over your identity, and over your choices. But that control is being eroded fast. If you keep your coins on centralized exchanges, they can be frozen or seized. If you rely on KYC wallets, you're handing over data that can be used against you. If you think, well, I have nothing to hide, then congratulations, you've already surrendered. But if you're still watching this video, you probably know something deeper. We're heading toward a new digital regime, one where freedom has a price tag, and it's rising. So here's what you need to do, and do it today. First, get educated. Learn how to use non-custodial wallets like Sparrow, Wasabi, or Samurai. Learn how to use decentralized exchanges like Bisq. Understand what it means to run a full node, because in this new world, financial literacy isn't just about growing wealth, it's about surviving control. Second, diversify your holdings. Don't go all in on any one chain, especially not one that's too cozy with regulated. Split your assets between Bitcoin, privacy coins, utility tokens, and maybe even legacy assets like gold or cash equivalents in certain offshore jurisdictions. Third, watch what happens next. This is just the beginning. The upcoming digital dollar pilot program will give the government programmable access to your spending. They can block purchases, auto-tax you, or expire funds after a certain date. The framework is already there, and once it's live, good luck opting out, unless you've already prepared. Now, before we close this out, here's the final warning. Privacy is a one-way street. Once it's gone, you don't get it back. And if the government can ban Monero with a press release, what else can they ban next? Maybe stablecoins, maybe staking, maybe self-custody itself. You think that's far-fetched? Australia already banned cash withdrawals over $10,000 0 cents. China can turn your CBDC wallet off based on your social score. Europe is moving to cap anonymous crypto transactions. The US is just catching up. So if you're sitting there thinking, I'll wait and see what happens, you've already lost. So here's your call to action. Don't just watch this video, act. Share this with someone who still thinks crypto is just about profits. Leave a comment telling us how you're protecting your privacy in 2025. And if you want to go even deeper, subscribe to this channel and turn on notifications because we're releasing a full series on surviving the coming digital financial reset, including which altcoins are still flying under the radar, how to protect your seed phrases, and how to build true resilience in your portfolio. Don't wait until the next coin gets banned. Don't wait until your wallet gets locked. Start protecting yourself now.